Well, it gives me great pleasure now to bring on board Mr. Dinesh Khara. We've interacted with him in different avatars, but today it's the first time we're interacting with him in his new avatar. So, Mr. Khara, first, before we dive into quarterly numbers and what lies ahead, congratulations. And markets are very excited. The stock has reacted post numbers, which means the markets have really liked your first numbers in the first forward guidance you've given in capacity of a chairman.
Thank you very much, Nikunj. First of all, for having me on your show, and secondly, for your compliments. Thank you.
How has life changed for you in last couple of weeks?
It's interesting. I was part of the top management team for last 4 years. Was holding responsibility for different verticals, but now, as a chairman, of course, I'm responsible for the bank as a whole. So to that extent, there's a total convergence of whatever I have done till now. So I think it's a great opportunity to lead an institution like this, where we are very relevant for the economy of the country. And I'm very proud that people have maintained its promise during the most difficult times. And we're in a position to serve the customers and also the economy overall. Thank you.
I looked at your guidance, Mr. Khara, yesterday, and you are sounding optimistic. Your NPA provisioning is not very large. Looks like happy days are back.
Well, you know, when it comes to NPA provisioning, I must mention that I think last quarter, what we had done, we had actually provided for one of the large accounts, large housing company account. And for if we knock off that one-off, and if we reckon the provisions which we have created for the performance slippages, additional performance slippages, then actually there's an increase of almost about 50 to 60% over the last quarter. So we are quite conservative when it comes to, conservative in the sense that we have tried to reckon all possible threats, and based upon that, we have made an assessment from bottom-up approach, asked the relationship managers about the likely stress in their accounts, and based upon that, we have done this provisioning. Actually, in many respects, you know, the way economy is evolving, actually post-COVID, or maybe as the unlock is happening increasingly with the unlock, the hope is getting revived significantly, and also there is a pent-up demand in the economy. So I think what I would say is that wherever we have seen the unlock happening, the demand seems to be coming back, and that is one of the reasons why when we look at our numbers also, we are almost in the personal segment. We are actually at the pre-COVID levels. And when we interact with the various industry players, the general sense which I'm getting is that they are almost about 70 to 80% of the pre-COVID level. So that actually augurs very well. And if at all, with every unlock, there is, I think, there's incremental hope which is there. And that, of course, gives the confidence and the courage to the customers also to come out and spend the money. So I think all this is something which is giving us the confidence that maybe going forward we'll have better days.
There are two things, Mr. Khara, which directionally everybody wants to know. And this may not be for this quarter or next quarter. In next 5-6 quarters, given that we are in a low interest rate regime, where do you think NIMs will go for State Bank of India? Because one would imagine that if NIMs are lower, if interest rates are lower, NIMs will also get compromised.
See, it's of course it's a equation where the two variables are very clear. One, the interest which we earn on the loans and the advances book, and also the interest which we pay for the deposits. As of now, there are various variables which actually impact these two very important levers which are to be reckoned for NIM. So I think the way things are, our effort is that we should be in a position to maintain these numbers, and that will be, and all efforts and all endeavors are in that direction.
The market consolidation, Mr. Khara, is visible in the banking space. And if I take the clock back, let's say 10 years ago, private banks gained because of market share loss to PSU banks. Now, within the large banks, SBI is gaining market share. Your CASA has gone higher. Your market share is intact. Two, three other large private banks are also gaining market share. Do you think this trend will only accelerate in coming quarters?
My sense is that eventually it will lead to a situation where entities will have to be stronger when it comes to their balance sheet. So that will be the effort and endeavor on the part of practically all the players. And the options could be multiple. Options could be organic, options could be inorganic, but much of it will depend upon the overall objective with which people will really try to address the various options. So I think consolidation would be a reality, but much of it will be then when the managements of various entities meet and look at what are they likely to achieve, and if at all it is in sync, then perhaps it will become a reality. Otherwise, in any case, all entities will try to become stronger, because the risk which we have witnessed in about last couple of years, and even more pronounced in this financial year, has actually given a very clear lesson to all entities that they have to ensure that the balance sheets remain strong so that they are in a position to withstand the risk.
Fair point. The historical problem for State Bank of India has been the cost to income ratio. Your predecessor, Mr. Kumar, said, look, we're addressing it, but that is something which cannot be addressed. Would you like to give us a sense into next coming quarters? How would you be addressing that?
See, of course, the current quarter cost to income ratio is more of an aberration than the norm, because we have actually provided for about 1,600 crore additional amount on account of the salary increase and the long-term benefits which should be made available to the employees. Going forward, I expect that our salary and the wage bill will go about 200 crore per month. So in all, about 600 crore kind of an increase is expected. So I think my effort would be that apart from looking at the cost, I'm also equally concerned to look at the revenue levers. And I will try and see that if at all we can shore up our revenue streams and optimize the operations. So that will be my effort, and how much it really results in cost to income ratio. Our effort is to certainly bring down the cost to income ratio below 50, and we will be certainly moving towards that direction in the days to come.
Mr. Khara, when I look at State Bank of India, you have everything going in terms of subsidiary, growth and leadership. India's biggest bank, India's biggest AMC, India's biggest life insurance company, India's biggest digital platform. But investors, they give the stock price of State Bank of India a stepmotherly treatment. Do you think there needs to be better communication and better understanding for State Bank of India? Because if I only look at the valuation what UNO currently has and the kind of work has happened on the UNO platform, it's quite extraordinary.
No, I do agree, and I think when it comes to the trust of our customers, we are very lucky to enjoy that trust, which is actually a very critical component for any banking institution. Almost about 83 to 85% of our liabilities are actually deposits. So to that extent, that is getting reflected in our composition of the balance sheet also. As far as the investors' expectations are concerned, we are constantly engaging, but if at all there is a need for engaging more with the investors, would be very happy to engage with the investors and see to it how to really address their concerns. We are quite mindful in terms of ensuring that we should raise equity or maybe the bonds at the most competitive rates, and that is something which we have done in the recent past when our Tier 2 bonds and 81 which we have raised at very, very competitive price. So the normal perceptions that we are having having a high leverage, perhaps we have to look at the cost of the leverage and not merely the leverage. If we look at the pricing at which we have raised the bonds, these are at the most competitive pricing, and in many respects we have set the benchmark also. So I think all said and done, it's not merely the equity or the debt which we should look at. We should look at what is the overall cost, whether it is equity or debt. So from that point of view, since the focus is more in terms of ensuring the right cost for whatever be the source, that should actually get reflected into our philosophy, and that I believe that we are actually demonstrating, and hopefully investors will also accept it, and maybe we will also get the desired response from the investors for our stock. But nevertheless, I'm very mindful that we need to engage more and more with the investors, and I would be very happy to engage with the investors and address their concerns. As far as transparency is concerned, we are ensuring that in all our statements, we are fairly transparent, we are adequately transparent, and maybe at times more than required amount also we are in a position to share with our investors and also with the media.
I just want to bring this point out for our viewers that the State Bank of India also has a UNO platform. If and financial listing is anything to go by, then trust me, our viewers need to understand the importance of the great platform UNO has made. We do the comparison of Paytm and other platforms which are loss making, and I've been told that UNO is on course to hit a profit patch very, very soon. Mr. Khara, I'm not asking you to take a moonshot here, but if I look at the listing of and financials, it's a fintech platform, and that's what UNO is. At some point in time, 1 year, 2 years, 3 years, would SBI look at listing UNO?
When it comes to our medium-term plan, it is very much on the card. But if you really ask me what is the final shape, well, I think we'll have to wait and watch at the material and the opportune time. We'll certainly come back and share whatever plans should be in this direction.
Just to also understand that what is happening in the lower end of the economy, especially the MSC and the SME space, is there a challenge there? Because right now the economic recovery has happened in large pockets, big companies, and efficiency has only kicked in those pockets of the economy. So even though the morat window is over, at the SME level, growth and NPAs, they both could be a concern.
No, I agree, and that is why perhaps it requires a little more deft handling. And that is the reason why we are engaging more and more with the SMEs, and we are trying to address. We are actually trying to understand where the problem lies and how can we really help them in mitigating those issues. So I would say that that's a very clear focus which we have, and in the recent past also, if at all this is a reflection. As on September, when we looked at our numbers, we had in SME sector we had almost as high as about 5,000 odd crore, including the pro forma numbers. Out of which I think we have pulled back as high as about 2,500 to 3,000 crore in the SME sector. So I think what we have seen is that they need to be guided. And also we have to ensure that the credit delivery happens to them in time. So these are two very important components which we have in mind when it comes to SME. And hopefully, as you know, as the large corporates are reviving, or maybe when they will come back in shape, it will certainly have an impact on the vendors and the distributors, and the whole of the value chain of the large corporates will also get the positive push. So I think with the positive push coming from the industry majors, the SMEs will also look up.
You speak to corporates and large corporates, are you getting a sense that they are ready to borrow more? Are they looking for large project loans? Because frankly, if I look at the sound bites from a Reliance or from a Tata's, they are using the word de-leveraging rather the word leveraging. Does that worry you that companies who understand risk, who understand how to handle debt, they understand the importance of cash flows, they are not committing capital, they are not committing a lot of debt or equity into the economy?
Components actually, one is a working capital. When they will have a visibility of the demand, I'm sure the working capital needs will also go up, and it's a different story whether that working capital is funded through leverage or funded through equity or funded through maybe NCDs. So that's a different story altogether. But yes, of course, once the economy comes back and also there's a visibility of demand, I'm sure the working capital will be something which will certainly increase. I mean, working capital requirements of these corporates will go up. The second issue, which is essentially relating to investment demand or maybe investment or maybe capital spending by these corporates, that I think is some time away for the simple reason that as of now, the capacity utilization stands at around 69% in the economy. And I think for the capital investment to come from any of the corporate, I think maybe the capacity utilization has to be somewhere in the range of about 80% when they will start planning for the expansion in capacity, etc. And also I'm saying so, I'm also the other very important aspect which has to be kept in mind is that there is still the brownfield capacity which is available in the economy for resolution. So which will also reduce the lead time required for ensuring the investments generating the surplus or maybe the cash flows. So I think all said and done, we will get to see the investment demand coming back once we'll be nearing about 80% kind of a capacity utilization. At least people will start thinking in terms of new projects to be put up. So that is what my sense is.
I'm going to ask this question, and I promise this is the last question on behalf of crores of account holders and folks who want to understand which way fixed deposit rates are moving. Fixed deposit rates have come down. Do you think, looking at the liquidity and the other factors which are at play, have fixed deposit rates bottomed out, or there is scope for fixed deposit rates to go lower also?
In the given and the current situation, my sense is that fixed deposit rates have almost bottomed out.
And do you expect that across tenures? The reason I'm asking you basic question is because we want to put this speed out in digital, because a lot of emails and queries are coming to us. People are trying to understand that where fixed deposit rates are moving. So I'm asking you a very basic question, but for the importance of crores of people.
The variation in the various bucket depends upon the kind of demand which we see as far as its deployment is concerned. So we'll not be in a position to comment upon which buckets, but to my mind, as of now, it seems to have bottomed out, because also when it comes to various components which we keep in mind, the other variables also are sort of indicating that perhaps maybe there may not be much scope for the deposit rates to really go down anymore.
Also tempted to ask you just one last question, that's on home loans. The festival season is around the corner. Banks are offering a very strong home loan rate. Do you think this is going to be as low as it gets in the short term, and we may not see further drop in home loan rates?
Well, home loan rates also, as I mentioned, that interest rate is something which is driven by many variables. So it's very difficult to really indicate that what is the likely trajectory in medium term as of now. But yes, of course, as of now, since we have got a definite push for our personal loan segment, which also home loan happens to be one of the major segment in that book. Out of about 7 lakh crore plus, which is there in the personal segment, our home loan book will be as high as about 4.75 crores, So that way, we are very mindful in terms of ensuring that we offer the best and the most competitive pricing in the given scenario. Much of incidence when it comes to the NPA. So to that extent, our credit cost is also low in home loan, and we are in a position to pass it on the benefit of that to our customers. So I think all said and done, we will ensure that it's a fair deal, which we continue to extend to the home loan borrowers.
Such a delight to have you on ET now, and best wishes for the festival season and best wishes for your new role.
Thank you very much, Nikunj. All the very best to you also. Stay safe, stay healthy. All the very best.